Did you know that December QT is going to stop? That means they may introduce QE again. That would not be very good. Now, what does that mean? Well, what's interesting is no one's telling anybody about it. Or I should say, they're not making sure we know that QE is stopping, QT is stopping. QT is a wonderful thing because QT, remember, before QT, we had QE. And remember what happened with QE. Inflation went to 9% because under Biden, using QE, they print massive amount of money, the Treasury, and then the Treasury gives it to the Fed. The Fed turns around and goes to the banks and say, here, take all this money. Okay, we'll buy your T-bills, we'll buy your mortgage-backed securities, but now you got a bunch of cash. But wait a minute now, make sure you don't use that cash, much of it, you can use a little for house mortgages and cars and so forth, but we want most of that cash going to the big tech stocks so they can do stock buybacks. So make sure you loan that money to the big tech stocks. We want to see stocks soar. Okay, and that's what they do. That's called QE. Well, by 2022, as the election came upon us, inflation went to 9%. Because, again, they kept on giving all this money to the banks, and instead of that money going into business investment and increasing, sales and machinery and increase labor and put wages up, none of that happened. They didn't put any money into business investment, always to these stock buybacks. By 2022, inflation was at 9%. They panicked. It was the election. So they entered QT. QT stabilizes everything. QT, you start raising rates. And it's a good thing. Well, now it's hush-hush. We're going to stop QT. That means they could start QE again. Now, remember, they've been fighting to try to get inflation back down to 2%, their target. They haven't been able to do that. So something else, and what also occurred because of all this QE is these AI stocks. Remember, back in October or April to this October, the big institutions, the hedge funds, all the big boys, they started to dump their AI stocks. $30 billion, but it was really quiet. Because what happened was that they took all this money, again, all this QE money, and they shoved it into increasing the money supply so they could increase the margin debt accounts. Because, see, you have what we call FOMOs. These are tourist investors, don't know what they're doing. They're very fearful. They're always fearful they're going to miss out. So they always buy stocks at the top. They panic. But they don't have their own money to buy. They don't have the dollars to buy. So they go to Wall Street, to their broker, and they borrow from it. Oh, in Wall Street, they're happy to loan them the money. Now they got them locked in. So here we had QE. It hit inflation of 9% because of QE. And because of QE, of course, all these AI stocks went up, and especially starting in April, when the big institutions started to dump all these AI tech stocks, the FOMOs went in, borrowed money, and they bought them. And that's why we didn't see a reflection of these stocks dipping. We didn't see the S&P going down. We didn't see the Qs going down because the FOMOs would go in immediately. And right now, that margin money is historic. We've never seen debt like this. So what's going to happen when they start with QE again? Easing of money, which does what? Starts increasing inflation again. So we got to hope that that doesn't happen. We got to hope that when President Trump, who I support, I'm hoping that he realizes what's happened here, and that if he's going to do this, that he puts someone in place to make sure, okay, that this doesn't happen again, where inflation goes up and these stocks keep going up. Now, here's the problem with the stock market. We're starting to see it now. And this is all from QE, again. So we're starting to see these AI tech stocks, remember when their prices soared, we're starting to see the prices are higher than their earnings. That's why we're starting to see them pull back. And also, it's causing these valuations to be stretched. So the consequences of that is always a correction, or worse, a crash. So we got to hope that doesn't happen. Now look at this chart over here. This is the margin debt. This is insane. This will show you. If you take the S&P, this is the light blue line right here, the light blue line. Look at this. The only reason it went up, not because of earnings, it went up because of, again, all this margin debt. Look at the blue margin debt. If the FOMOs were in here buying, panic that they're going to miss out, the S&P would never be where it is, and the stock prices would never be where they are. It wouldn't be happening. So what does this all mean? Well, this is the time you got to start making a decision. Now, a lot of people made a lot of money in these tech stocks. We're starting to see weakness come in these tech stocks. Now, remember, when I say weakness, it's been weak since April of 2025, 7 months. 7 months, you have the biggest institutions dumping. So, and now, I'll show you another chart what's happening. So what's happening now is we're starting to see not only the margin accounts, starting to see hairline cracks there. And remember, this is how we got that big move from April, right? From all the FOMOs in there, because they just kept on borrowing and borrowing and borrowing. But here's the thing we got to watch now. If you go and you take a look, for example, at the Qs, before, when stocks pulled back, they'd immediately go back up. Pull back, they go immediately back up. Not recently. Now when they pull back, look how long for them to get back to their peak. Here we are again. Here's the last peak. Look how it pulled back. Usually they go right back up. Why is that happening? Because the FOMOs right now are going to start getting notices. Hey, margin calls. So if this continues, every time you see these big tech stocks, the AI stocks pull back. Look at NVIDIA, for example. Look how NVIDIA just pulled back right here. I'll show you. And this is why they're pulling back, because right here, let me put up NVIDIA for you. There you go. Look at NVIDIA, how it's pulled back. Look how it pulled back in here, and then it's pulling back here, because we're not getting the FOMOs going back in and borrowing all this money for their brokers. What's happening is they're starting to get nervous now. They're starting to get some margin calls because the prices are dropping. Look at NVIDIA's price, dropping again today. Look at this. So as these prices drop, the FOMOs get really scared because they don't have the cash. It's all borrowed. They can't meet their margin debt, so they have to dump. Now, if this thing starts heating up and we start seeing lags, meaning a big tech stock pulls back, it doesn't go right up, it's taking longer and longer to reach its high, then you got to prepare yourself. There could be a correction. You should know how to sell shorts. The only way you're going to protect yourself. What are you going to do? Buy Coca-Cola, buy some defense stock? Doesn't work that way. There's no place to hide. So, and if they start QE again, after stopping QT in December, they got QE again? Oh, my God. So we've had a wonderful, wonderful gift, this rally, since April. So don't throw it away. Now, maybe it'll keep going up. Maybe I'm totally wrong. That's okay. We'll stay long. But the signals are there. And because we have the skill to short it, if it does go down, we're going to be just fine. We're going to make more money. Do you? If you don't have that skill, just go to my site, philsgang.com. We'll teach you that, how to sell short, as well as long. See you on the charts, philsgang.com.